What a week. Hopefully you made it through okay. Lots of action, lots of things going on. We're going to jump right into it today. For those of you who tuned in last week, we talked about a capitulation event, right? Looking for some type of ugly gap down on Monday to try and mark a short-term bottom in the action. That did not happen, right? And I posted this on Monday basically saying the market is taking the path of most frustration, where we sort of just bounced up into this range with a gap up to start off the week, which is traders, just putting our trading hat on, is usually the most difficult scenario when you don't really have any clear resolve. Now, by Thursday, this was the week's action here. We basically played ping pong in between a 2% range around 660 to 645. It was, ceasefire talk on Monday, and then there was a sell-off after Iran denies it on Tuesday. Then we had a peace plan proposal on Wednesday, market bounced, and then Iran pushed back on Thursday, and of course Friday things just spilled over as, reports of kind of more troops and stalemate action in the Middle East sort of took over. So all in all, a very sort of, back and forth week where we sort of built up some energy, got some folks off sides, and then spilled over into Friday, into the weekend where no one wants to carry risk. And, every day that goes by and the strait is closed and oil is not flowing, it has repercussions on the economy, of course. And that's what Wall Street is looking at now. If we look at inflation, this is trueflation as of today, updated March 27th. And, everybody has their gripes. So some people don't like trueflation. They prefer the government data or otherwise. That's all fine. I think the only point is no matter really where you look, we are going up and to the right now in terms of certainly year over year inflation, which this is tracking. But if you look month over month, then, you're ratcheting up at an even higher, faster momentum clip. So if we look at the 10-year Treasury, this continues to scream higher. And this is just becoming a problem. We talked about this the last 2 weeks, frankly. We had, again, just this absolute V-shaped monster move, one of the fastest rate of change moves now that we've seen in quite some time, top percentile. And now we're over 4.4% going into the weekend on the 10-year. Now, again, this all, translates back to Fed actions, and what's, sort of just amazing to see now is that the only move that the market is potentially pricing in for the Fed now comes in the form of a hike. So again, when we think about where we started the year with roughly 2 to 3 rate cuts priced in for 26, then it got, ratcheted down to 1 or 2, then it was 1, now maybe nothing, and now maybe a hike. So this is the market sort of calibrating here. You're seeing all the feedback loops in play. Of course, everything that's occurring in the Middle East here, putting a tremendous amount of pressure, and other factors as well. When we look at the VIX, this did close north of 30 this week. So we are once again now going to be looking at a lot of charts here in just a little bit, but we're once again now kind of looking for some type of capitulation, sell everything, something has broken type event next week. We are primed for it. We have the ingredients for it. And hopefully, you as a trader don't have too much unhedged risk this weekend on the long side. But we are above 30. And that's right. We also had some influential news here on Meta. So basically, we had a case where they lost I think a couple, or it's either stacked up in a line, but basically some precedent here that Meta is responsible for addiction and users' actions. And the problem is that this spills over to Google as well. I think they either lost or will now be in the spotlight here, but there's lots of other cases, I think, in the backlog that could now kind of spiral up now that this precedent has been set for Meta. So this caused a lot of pressure here on Meta, Google this week. Speaking of Google, in terms of the AI front, had a handful of developments. I know they had their new AI Speech 3.1 Flash that was released. They had their Turbo Quant sort of AI compression algorithm, which is claiming a ton more efficiency in terms of memory usage. And stocks like Micron, which were already seeing some pressure, started to, sort of accelerate here, and we're very quickly in sort of a 20% drawdown in Micron. We did have a position in this, so we took a loss on this position. So we played for the breakout here, and then we ended up getting stopped out and taking a loss this week. We did formally play a nice big run up on that initial move, but this one certainly didn't pan out. Earnings were spectacular, but the market doesn't care, and that's really all that matters. Now, this video is sponsored by our friends over at Investors Business Daily, so don't forget to check out the links in the description of this show. Once you get done watching, claim those offers, get the discounts. Tell them Evan at the Trade Risk sent you. Now let's look at some of the numbers this week. We had basically, red across the board in terms of equity performance. So all of the indices were pretty sharply in the red here. QQQ down 3%. Gold was up this week. There was a nice little turnaround, but a lot of volatility, and oil was up as well. I'll also draw your attention to this middle column here. So this is the 1 month returns, and this is where things are starting to get pretty interesting, because over the last 1 month, we're getting very close to high single digits, low double digit negative returns here for all of the major equities. So that is notable here as this drawdown sort of picks up steam. Now, speaking of drawdown, here it is. Basically fell off on Thursday and Friday as the range that we looked at earlier in the week kind of gave way. And again, as we went into the weekend here, nobody wanted to hold risk, and markets sort of, were free to drop down here as really all recent support has been broken. This is VIX, looks like a total mirror here, going out at 31 to close the week. This is the highest weekly close now for the VIX in quite some time. So we have fear in this market. We have markets at 100-day lows or so, give or take. And now we are waiting for again, that shoe to drop. Dollar index was firm this week, so it did kind of claw back after some volatility. And the 10-year Treasury yield we sort of already looked at, going out at 4.44%. And that, again, is a problem here for equities. Now, sectors, there were some winners. You really had to be concentrated, no surprise, in energy, but materials, utilities, consumer staples, had some other areas where you could at least hide a little bit this week, which was nice to see. Communication services were hit super hard, thanks mostly to Meta on that one, and tech and financials. The cheese still stands alone here, so we're looking at our model for trend, path of least resistance. Energy, that's it. It's the only thing green. And there's not much in the neutral state. In fact, this is more on a bearish reading here. This is kind of, we would interpret this bearish to neutral and bearish to neutral on that as well. So virtually every sector now in terms of breadth has a bearish outlook minus energy in our book. Now, if we look at 52-week highs and lows, we didn't see a tremendous pickup this week. Now, I don't have Friday's data here, so I would expect Friday to have a lift up here, but we didn't quite get a big thrust up. And again, this is kind of what we're effectively waiting for here in terms of just seeing some type of washout. I think as technicians, as traders, short-term moves, trying to time markets, that's what you want to see right now. We'll talk about that in a little bit. Still getting a washout reading here on percentage of stocks above a 20 SMA. So we're just in this kind of, just lower percentile move. Put to call ratio, again, I would assume spiked here on Friday, but we don't have Friday's data. Bitcoin rolled over this week, so this was kind of hanging in there. It was holding up. Now it's not at new lows, so I guess that's something to hang our hats on. But now that we have a lot of trading now between mostly 75 and 65,000, this is the goalpost that we're going to be wanting to pay attention to. I think Bitcoin is on breakdown watch next week. We got to see if these lows hold. We need them to hold around 65. Otherwise, that's likely going to take another dip down, at least to retest the February low here at 60. And then, if that can hang in there and hold, then maybe we've got kind of a double bottom sort of retest. But otherwise, that's, looks like it's going to be in just a tough spot. Next week, we do have a busy week. We've got unemployment data coming out, and we also have jolts. So we've got lots to kind of move markets, I think, on the econ front next week. So it's going to be a busy one, to say the least, between everything going on macro-wise, geopolitically, and economically. So let's take a look at some charts. All right, we are back. We've got charts in front of us. This is Warden TC2000. I want to start here, which is our view of stocks hitting 1 month lows. All right, so this is just one, it's a pretty good measure of kind of capitulation or washout. The tough part about this is you could pick any interval, right? You could pick 1 month lows, 6 month lows, right? Where do you go? But for short term kind of exhaustion, I like looking at 1 month lows. And these orange lines are when you kind of get towards oversold metrics. Put this back on regular. Is when you start to get washout metrics, basically, not oversold, but washout. And you can see that we are still a little ways away. We're getting pretty close here in the Qs. So basically what this is showing us is that 51% of stocks are at 1 month lows right now. And as you start to spike over 55%, that historically has been a pretty good indication of where things get washed out. Doesn't mean they can't go lower. Doesn't mean we're just all in the clear suddenly. But when you start to think about, when you start to, kind of look at this market right now as being damaged, but looking for some counter trend entries or where you might want to try and play for a bounce, if you're playing that game, if you're a tactical kind of trader, this is what I'd be paying attention to. QQQ is, in some sense, some of the most irrelevant because there's only 100 stocks. Look at the S&P 500, you're looking at 500 stocks. And then the Russell 2000, of course, has the biggest breadth. And this is right now the furthest from washing out. So one of the things I would be paying attention to on Monday, basically same comments that we talked about last week, is a washout, is some type of ugly gap down. I think trying to rip the Band-Aid off and get a puke going here is frankly just going to be the quickest resolve. It's kind of this cleansing rinse that is sometimes just necessary in markets. But of course, like we talked about at the start of the show, last Monday, we got the exact opposite. Markets gapped up. And again, it just left us in this weird kind of spot. And I think this is the more frustrating path, right? For most people. Most people just want that all clear signal. They want to see some real carnage out there so they can deploy capital. And the market's not giving it to us. And maybe it doesn't, right? Maybe that's what this painful down move is volatility doesn't really get above 30, doesn't spike, doesn't wash people out. And we kind of grind lower. And that would be a pretty painful sort of trading environment. So the way I would approach this, and just to put the educator hat back on, thinking about traders, I think stepping away right now, if this is not your cup of tea, if this is not your market, if you don't like to chase these tactical bottoms and you're looking at all this damage that is stacking up, then you can, by all means, take a few weeks off, save yourself a lot of stress, headache, and anxiety. And you don't have to look at markets because there's probably nothing for you to do in terms of a healthy swing trading environment. But if you're tactical, or if you're a day trader, or if you're short term, you've got things you can be on watch for. Or if you're an investor and you've been waiting for stocks to get cheaper, some of your favorite stocks, I talk about having a shopping list. That's what I do. And so when things start to fall, I'm comfortable starting to leg into those positions more for things that I want to own over the next, over the next cycle, let's call it, right? 3 to 6 months or plus. So I have a basket of stocks that I'd be looking to add on weakness, build a position, and do that. So that's kind of all the modalities there, I'd say, in terms of trading and ways you can look at this market. Let's take a look at the price action. Things are starting to unravel. Speed is picking up. So you are in some form of a capitulation zone right now. This is the fastest that the market has covered. Take a look at the 3-day rate of change. The S&P 500 down 4% in 3 days. So that's notable, or really it's 2 days. Notable. And we're starting to pick up some steam. We are coming into this little chop zone here from the fall time of 25. And again, if we just put our general drawdown markers on, we're at just shy of a 10%. I guess it's still a pullback, right? Correction would be over 10%. So we're not quite at that 10% correction zone for the S&P 500, but very likely we would test it or challenge it or wick there on Monday. So we're getting some cuts here. Like, it is definitely starting to loosen up and retrace. Like we talked about in the prior videos, I would like to see just something that would really, with like a 1 or 2% gap down. I would love to see 6,200 tested, this zone just back in here from the summertime, and that kind of coincides with more or less the highs here from 2025. I think that would be a great spot to just see some capitulation and then set up a nice bounce for us. That would still only be about 11.5% correction from the highs, but I think that would be a good target for early next week, Monday. If we could get down here, that might be a good spot to at least sink our teeth into some first buying opportunities, or playing a dip, or selling some puts on things you like, right? Like, those are all ways you would be approaching this. Everything's counter trend at this point, right? There is damage here. Look at the weekly chart. I mean, there isn't much to like. You can see it's down. The S&P 500 now is down 5 weeks in a row. So you do have some kind of oversold brewing there. If you throw in some Bollinger Bands, the daily chart closed underneath them, weekly chart starting to stretch and close underneath them. But, this is the chart, right? Like, we've been grinding and floating up, moving sideways, very gradual, and then a rollover. It's fairly textbook in the way this is all kind of, taking shape. So really, I don't think there should be that much surprise with this week's action and with kind of the coverage that we've been sharing here. Not that we're predicting this, but everything is pretty orderly at this point. So that's kind of the way I'm looking at the Qs right here. I'm sorry, the S&P. Here are the Qs. So the Qs, clean up some lines here. The Qs are rolling over, right? They broke down last week. We talked about that. Expansion down and a bigger range this week. So you've effectively just got follow through selling to this breakdown. And once again, if we're looking for some capitulation, if we're looking for that bigger, level, it's more so around this 540 zone in the Qs. That's where I would like to see this really kind of puke down to. And that would be about a 15% correction in the Nasdaq 100, which would be, again, a pretty good slice now where you're starting to get some value, I think, in some individual companies. Daily chart, again, you can see just some fear out here going into the weekend. Range is expanded. Volume didn't pick up that much, to be totally frank. Dollar volume, not much above average. So again, you're not really seeing like dislocations. You're just kind of still seeing relatively orderly, people hitting the exit door. And so timing that capitulation, I think, is what most folks are waiting for. Russell 2000, they didn't even close at the lows of the week, right? So last Friday, they are still above it. We didn't take out last Friday's closing lows. So there's some relative strength here in the Russell 2000 this week. All right, so that is really the lay of the land there, and then we kind of covered the way to think about this market. It's a scary market right now. It's a frustrating one. So taking time off or dialing trades back, like that all makes sense. Going out above 30, like I said, 31 here for the VIX. This is basically a cycle high and would be the highest level the VIX is traded at since the tariff time last cycle. All right, things get broken, right? That's the technical term. Things get broken when VIX stays and holds over 30. So do beware of that. Gold this week. So gold had a little bit of a recovery. That was nice to see. It's been sort of trading. I mean, it's just in a tough spot right now with a lot of cross currents, but it effectively was trading like a risk asset last week. It did stabilize this week and did kind of manage to finish green. It would be nice to say that the worst is behind us and the pullback is done. We shall see. Our long-term Galahad trading system is still involved in gold. We did monetize some of our hedges early this week. So that basically means we sold the puts that we owned, collected some of the value that they were up, and then we rolled forward down to another strike. So we are still long this. It doesn't have a tremendous amount of room at this point now. There's been a 20% correction, but when you throw on a weekly chart, I mean, this is the chart, right? It looks like a tech stock. So when it starts to accelerate and go parabolic, you do have to expect that volatility will pick up. So we're still involved in it, and we're hoping that it can stick a landing here pretty soon. Here's oil closing at highs. So this is the USO ETF, $124, and new weekly closes. I mean, this is again, the best hedge for a portfolio at this point. It's also, it's very much like the VIX. I mean, you could just see like a 10%, 12, 15% move, depending on which way the war goes. But, it's working. XLE also working, right? Smallest sector in the S&P 500 continues to hedge a portfolio up 5% and accelerating. Very good. Congrats to those that are still holding a position there. What else? IEF, we already talked about it. So this is the Treasury bonds. I mean, I guess the one glimmer of kind of hope here is that it did close green on Friday. So that was good that we didn't see more, accelerating rates going into the weekend. High yield credit, still a problem. I mean, it did hammer off the lows a little bit, but this, again, throw in another issue that we've been talking about, it's private credit. And you've got just, again, a few different risk factors that this market is grappling with. So I think that is everything I wanted to talk about market-wise. I think having the shopping list is smart. Mags. Talked about how much I hated mags in this period here, and I started a small position right here, market on close, 1% position size. I am not looking to be a hero. I am not wanting to build anything crazy here, and I don't want much overnight exposure, but I'm willing to start a position here in the Mag 7. It is a 20% drawdown. That is why it started to hit on my orders. So 20% drawdown from highs. This is where I can start to like Mag 7. Now, I will say my original plan was to really allocate into Apple, Nvidia, and maybe Tesla if it could get its act together. But after the Meta spiral here on Thursday, Friday, and the Google, kind of sell off here, it made me just opt for the mags as some exposure. So again, it's just a trade, slow build position. And I expect that I would get better prices at lower prices in the near future. All right, let's switch gears to our trading systems. Let me pull up the dashboard that just got updated. So here is our member dashboard. We made some updates to it this week. Updated for Friday. Great relative strength for Galahad, much needed because Galahad felt a lot of that gold pain the prior weeks. And our momentum portfolio surprisingly held in there on Friday as well. Now, here is a new sort of gauge here, which I think is extremely valuable, which is just understanding kind of the market context here from a swing trading perspective. So the only thing we build systems for are for end of day swing traders. We want to try and remove as much noise and the staring at charts intraday as possible. So everything's end of day here. And this is calibrated specifically for a swing trader. So right now we are in the weakest state, a weak swing trading environment. Surprise, surprise. But that's been the state now for 16 days. And, you should expect, this is what we share with subscribers, but, most breakouts to fail, lower your risk per trade, take fewer signals, consider an index short. Be defensive, right? Be conservative. That's what your goal is. You can still find and try and look for setups. I'm going to share some right now on the long side that our model will still crank out. But you as your portfolio manager need to understand how much risk and heat you're taking in your account, right? And from our other gauge here is momentum is weakening. So there's really no surprise. This environment's terrible right now for swing longs. Galahad here, again, picking up some nice relative strength over the past 5 days. It's up slightly. S&P's down 2%. I think it's doing fantastic this year. It's down a little bit on the year, I believe, but it's still doing well. Let's take a look at the watch list, my watch list of rocket stocks. So Net, Cloudflare. This is, everybody asked me about software. What's your favorite software? Do you like software? No, I don't like software, but I do like Cloudflare. It's kind of the only one that I'm really sticking my neck out on. We do have a signal on this. So we do have Rockets got involved in this at 190, got all the way up to about 226 last week, got close to our target, missed it, and now it's coming back down towards our exit zone. So I'm going to be paying attention to this next week. I have a position here and looking to see if it can hang in there. NXT. So this one here, I've shared this one before. This is solar, but hanging in there pretty well. The structure of this chart, we own it at 117.41, basically exactly where the stock is. You can see where our stop is and our next target. So that's the way we're structuring it. SOLS, this is a new one that came on this Friday, and I really like the structure here. This is a chemicals name. Basic materials have been working in this environment. They're almost like a pseudo cousin to energy of what's working and what's staying resilient. A lot of our performers right now tend to be in industrials, kind of basic material chemical names. SOLS is interesting. It seems very under sort of talked about, reported on. It's a recent IPO, but we got a buy signal on that on Friday. And then Flex. I did a video midweek on this one, well, talking about the market, and then talked about this setup as well. That breakout felt some pain, right? So it started to break out on this early in the week, and then it certainly gave most of it back on Thursday, and it's right back to our entry. So it's kind of in this range again. We still own it. We still like it. You can see where our current stop is, our target is, and that's the way we structure our trades. So all long ideas, our algorithm will continue to spit out these different swing trading kind of structured trades with exit stops that trail and move. But you have to also keep in mind the swing trading environment. It is pretty poor, right? So again, the good ingredient here is when you can start to get some type of washout from a market reading perspective, and then have a nice bullpen of either investment ideas that you want to get into, or names like Rockets are showing here. And these are just a handful of names on my watch list. There's much more on the actual algorithm itself. So that's what I got. Hopefully you made it through okay. Busy week. Take some time away from markets. It is going to be action-packed again next week. There's no doubt about it. So get some sleep. Thanks for watching. Check out the links in the description of the show to our sponsor, to our Rockets, to our Galahad portfolio. If you need some stress-free mechanical trading systems, check out what we have. Thanks so much.